We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the SP 500 index. And in today's video, I have all the indicators already pulled up. We're going to break down what's going on here in the bigger picture, because in my day-to-day videos, I break down my thoughts on supports and resistance levels to watch for the next trading day or even the next several days, right? So I shared that in a previous video, and if you guys want to gain access to this clarity that 42 Vision and the inflow versus outflow brings over the charts, and get connected to our bots, as you're going to see pop up on the screen, an example of what our bots sent out today from the SPY bot, well, the link is down below in the description to the 42 Vision indicators, getting connected over to the bots, and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. And we look forward to having you join us. And in today's video, we're going to break down the bigger picture here. We're going to go back as far as 30 years back and the previous crashes that have happened in the last 30 years to go ahead and analyze the charts and some key details that are going to be crucial and critical here in the next few days and weeks, guys. The make it or break it, in my opinion. So you're definitely going to want to stick around for this one. But before we break it all down, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 Vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. Our Tesla bot at 9:45 a.m. sent out a bear indicator. From that moment forward, outflows crossed the midpoint to the downside, pure weakness there on 42 Vision, and put options went up 100% plus within minutes to an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 Vision indicator, getting connected over to our Discord and bots. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the SP 500 index, and right now it's been having lots of volatility, but slowly in a downward trend for the last several weeks and days, right? We've been coming back down from the 420 area, which it rejected multiple times, 417, 418 area, and it's came back down here to the fight between the 395 and 400 to 402 area in the last several days, right? So right now, when you zoom out and we look at the SPY, right, on the 4-hour or the 1-day chart, let's pull up the 1-day chart. Outflows are dominating on the bigger picture here, not the 30-minute chart that we were just showing, but the 1-day as we're looking at right now. And it's under a bear indicator since around 404, and it's hit lows here of 396 to 397. And if this breaks 395, then comes back down towards the 392, 390 area, 387, and all the way down to 380s in the last several weeks and months, right? What we've seen. So it's super important to realize where we're at right now on the 1-day. Outflows have crossed, but if you go ahead and zoom out even further and we look at this on the 1 week, we have a divergence. But this is the second bull indicator that we get since way back here in January of 2022, right? And I shared this with everyone in my videos last year throughout the bear market, that with 42 Vision and the members that were connected, we had known things were looking bearish since this bear indicator way back here and outflows had crossed. And the first time it crosses back over in the year of 2022 was August, quickly came back down and got canceled, this bull indicator, with a bear indicator, and outflows began again. So the question mark is this bull indicator any different, or is it going to play out like something like this? This is critical to not ignore, because it happened last year and it caught a lot of people off guard, and we went back down the next leg down to the new fresh lows that were hit in October. Now the inflows have slowed down here and it's at 24.47. The inflow slowed down last year at around 16.39, and that's where it rejected also in December, right around that area before coming back down on the 1 week. But this is our bull indicator now. There wasn't a bull indicator at that time, and inflows being above the midpoint. This is crucial, and we have headlines talking about how the S&P is still set up for possible gains this year despite the sharp spikes in volatility and predictions of more pain to come. And we're going to look at some different data points that are creating this volatility that we're seeing as well that should not be ignored. Now, when we come over to this headline, it states here, the S&P 500 index is set to nosedive. Wall Street #1 analysis warns. Now, this is an analysis that we've actually went ahead and referred to last year when things were trying to get overheated, and then they pulled back into the end of the year, and then again things brought themselves back up, and we keep rejecting around the same area that he has stated to be the resistance, right, which is about 4,150 to 4,200 area on the SPY, right, and the S&P 500. And it's Morgan Stanley's Mike Wilson, right? He's stating that the S&P 500 can plunge by more than 20%, and his bearish case is somewhere between 3,000 and 3,200. We've broken that down in previous videos, but right now, what I find interesting is when we got this bull indicator, we quickly started to get red bars, but the outflows began. This time, we don't see red just yet. This week will determine if that's going to shift, or next week from green to red, especially if we continue with red bars pulling back down, and we're pretty close to the same area where that support of the bull indicator popped up, and that support was broken last time, turning this into a fake out, and the outflow showed us and guided us through the volatility. Now, here we are again in a similar scenario, not guaranteed to react the same, but something I do want to share because a lot of people always state, hey, you do those videos in the shorter time frames, can we see things from the larger time frames? And here it is. The 1 week is under a bull indicator, inflows are above, we're pulling back, and could a bear indicator pop up to cancel out this bull indicator and outflows begin? That's going to be crucial to watch now in the next few weeks and days, right? Now, the one interesting part here that's going to be the make it or break it, like I shared earlier in the video, that's going to be crucial is going as far out as the 1 month, going as far back as 30 years, and there's something critical happening here, okay? The last few times that outflows have crossed and they came back up, once it crossed back up, things continued strong, followed by a bull indicator, right? Outflows crossed on 2000, inflows picked back up in 2003, and there you see it, and the bull indicator to cancel this last bear indicator. Same thing in 07, 08, and then 09, right? Cancel that bear indicator, outflows crossed, inflows came back over, bull indicator popped up, full strength for the next several years. So when we come closer to the volatility that has happened recently, we would cross over, go back up, cross over in 2020, go back up, right? Now, we're in a situation that the bear indicator has popped up, the outflows have crossed, and the inflows are trying to pick back up on the 1 month chart, but we have no bull indicator in the process. And if we were to cross it up and then come back down because for some reason the Federal Reserve cannot tame inflation and something breaks, or a black swan event, or something random out of the control of the data that we're seeing brings things back down, it's going to be the first time in 30 years that when things cross over, right, to the inflow side, that we come right back down to reject under a bear indicator. We've never seen that in 30 years. So right now, based off the charts, and they're talking about history shows the S&P 500 is set up for gains this year, despite the sharp spikes in volatility and predictions of more pain to come. So they're basically trying to contradict it in this article. Now, I find it interesting, but the only way that's going to make some type of sense is based off the history of the 30 last years that we see here with the bull and bear indicators, the inflow versus outflow, the dip areas on 42 vision, and these inflows crossing over. It would take the 1 month and the 1 week to be pushing up really strong and a possible bull indicator here and these inflows to go up. Like I stated, in the last 30 years and in the last several corrections and also crashes, this is going to be the first time that if we come up and we come back down, that we see that happen within just a few months or within the same year, right? In the middle of a bear market or crash scenario and a Fed that's doing quantitative tightening, raising up rates and everything. So that's going to be very interesting. For the bears to be right here, this bear indicator needs to continue to hold true within the volatility and not change on the 1 month and cancel out the bull indicator on the 1 week and the 1 day. And for these outflows to slow down and actually reject to the downside, okay? This has never really happened. Usually it goes down for some time, right? And it continues down. And once it comes back up, it's crossed over and fought itself up to stay above within the volatility. And then it just continues, right? Until the next time it crosses down. And in these smaller periods that you see here, it's been during smaller corrections and crashes. The biggest ones were back in 08 to 09 and 2000 dot-com bubble. And you could see that there. So right now, it's very interesting where we stand on the 1 month chart. And we could see these inflows trying to come back up. We've never seen them cross and come right back down. So this is critical. I would be watching this carefully if this bear indicator continues to hold. And some of the key levels to watch is the support and resistance here within this area, which is 420 to 430 area to the upside as resistance, and to the downside is the 390 down towards 380 area, and below that is the 350 mark. So this is critical. This is crucial, and this is what's going on in the bigger picture. And if these inflows pick up, we may have strength that will continue to reflect into the charts, and we need to see how the data moves with it. Now, some of the data that everyone's referring to, right, that the Fed goes ahead and makes themselves more aggressive is based off the 10-year treasury and everything going on treasury yields, right? So when we go ahead and pull up here the 10-year treasury yield, we could see here the full transition from the dip area here in 2020 all the way to the rip area, bull indicator, and everything going on in the bigger picture, right? But in the short term here, when we go ahead and zoom in and look at this on the 30-minute, right now it is slightly coming down. So in the short term, the lower this goes, the more volatility will persist, because the market can go ahead and anticipate, okay, things are probably stabilizing out. Things are actually not going to be as bad as we thought. And then the market runs up a little bit, and followed by the VIX reaction, right? When the VIX is coming down, it starts to create that euphoria again. But if you look in the short term here, in the last several days and weeks, we've been in an uptrend on the VIX after being below 20, hitting highs here of 23, creating some fear and volatility in the market. And same thing here with the treasury yields going from around 3.8 all the way to highs here of 3.9. And if these treasury yields go back up towards 4, it's going to create further volatility, in my opinion. And anything further away from 4, the more fear and uncertainty and doubt it can bring to the markets. But we are seeing here right now in the SPY, right, and in the treasury yields, a full move here to the upside, and then also the SPY trying to find a bottom, right? And these larger time frames like the 1 month, having the inflows really close to possibly crossing over, and then creating the possibility, if it finds strength and breaks the resistance, to cancel out this bear indicator for the first time in nearly almost a year. But in the shorter time frames, when we go back to the 1 week and the 1 day, we could see here that things are slowing down. We are under a bull indicator on the 1 week, and on the 1 day, outflows have crossed again. If this continues to persist, it could start to reflect pretty quickly into the 1 week, in my opinion, and the 1 month can start to slow down. And if that one rejects, the pullback could be commencing again, right? The next leg down, like what happened on the 1 week chart, when you go ahead and look at it here, when things looked pretty strong and they came right back down, rejecting, canceling the bull indicator, getting a bear indicator, and outflows crossing again. And that would take for these outflows to cross again and cancel this bull indicator as well. None of this is guaranteed, right? It's just something to not overlook. And right now, treasury yields have spiked up again. The whole entire market expectation is expecting rates to go even higher than anticipated. And we also have the VIX coming back up over 20, right? And at a bottoming phase here, almost trying to curl up. And if it gets a bull indicator, it could quickly start to move back towards 30 or even above that. So very interesting charts where we're at, and it's going to take data and the Fed to either make it or break it here, especially with that 1 month getting really close there to the midpoint for the first time in over a year. And I don't want to go ahead and say something so bold, but when you look at these charts, when these inflows have crossed, the bull markets have begun, guys. You could see it there every single time, and they've lasted several years and even months at a time, right? Even the previous ones, they were pretty short, but they lasted for several months and years at a time. So if that does cross and we come back down, like I stated, it'd be the rarest thing that's happened in the charts that we've never seen in the last 30 years. So the bears would be right there, but it would be very weird or different, I would call it, right? And again, this is not financial advice. This is just my opinion and perspective alone, that we cross over for the first time in 30 years and come right back down. Because once these crossovers have happened, especially on the 1 month, followed by a bull indicator, it's lasted for several months to years at a time. So if the bears are going to be right, this needs to reject below it and come back down. So this is crucial and critical. And like I stated, the make it or break it. And I'm watching this very carefully. So if you guys are interested in becoming part of a growing community of investors using these resources such as 42 Vision, our bots, and becoming part of a growing community of investors all looking to learn and grow together, once again, check out that link down below in the description to the 42 Vision indicator. And we look forward to having you join us. And I want to share one last thing with you guys, where these analysis price targets are coming from when it comes to where they state that they believe that the market's going to go either towards 3,000 to 3,200, and on the SPY that's 300 to 320, and to the upside where they think that resistance sits of 400 to 420 on the SPY and 4,000 to 4,200 on the SPX. So we're going to break that down here in just a moment. So I shared these points several times last year throughout the year as we were pulling downwards and even towards the end of the year. And these 2 points are critical because 320 is the point down here at the lower extremity. And that's where the bears are actually trying to point towards. And the bulls have talked about 401 and 402, that area of resistance that if they broke through it, they can gain strength. Now, interesting enough, every time we've reached up to this point, we have actually gone ahead and lost traction. This is the first time that we're fighting right there with it. But if we break through it again, this is where the bears are getting their price target, in my opinion, of 320. And that means that we would break through the lows of last year. And it would take significant outflows at this point for us to reach that. Now, every single time we've pulled back slightly below the first purple line, we try to bounce back up somewhere in the middle of it once those inflows have kicked back in. And you could see it there in the history of the chart. And very few times has it actually crossed over. And when it does, it seems to be nearly the end, right, of the whole entire bear market, or it just has a few months to go, right, when it's happened. The most recent crash was the 2020 crash, and we bounced right off that line down here at 232, 233 area, went a little lower than that to 219, but bounced right off of it and came back up. Seemed to have been the overextended area, and that's what the bears are actually pointing towards here in this current crash, if we're still in this bear market. And that's another thing I wanted to share with you guys, especially if it's your first time coming across this channel. because I've broken it down in previous videos, and I may touch base on it again as we pull away from it to the upside or as we pull down towards that lower extremity. And that is why those price targets are there, right? The bulls see this getting through 4,200 to get above it and push away from it. The bears see it as 4,200 to 4,000 being a resistance, which is near where we're at on the SPY in the S&P 500 index. And the bear case bottoming or extreme weakness is 320, and you could see it there between these lines. So that is what they're looking at, and like I stated, it's going to take extreme outflows for something like that to happen. And as I shared, it would take also a rejection of those inflows going back down and not crossing over on the 1 month chart. As always, guys, thank you guys so much for watching, and let's make some money.